Absolutely. Absolutely. We get to continue to see, we first saw it in Europe, air freight volumes, as early as the middle of last year. Definitely by the end of the year, we saw both FedEx and XPO warn that indeed softness in Europe was going to impact their results. We saw it then start to happen in Asia, but Asia, once it started, caught up quickly and actually passed Europe in the rates of deceleration. So we're seeing down 7 to 8% kind of volume numbers in both of those economies. And in Asia in particular, we're seeing some rather frightening declines in volume that are just not good indicators for what's happening in the global economy and what's happening in the technology economy. Tariffs are having an impact.
So Jennifer, this brings up a good point. Is this something that was in play before the whole tariff narrative came to Wall Street, or was this something that was maybe due for at least a U.S. economy that has been in expansion for now the longest it ever has been, and a global economy that has been perhaps riding some of that wave as well? And is it manifesting itself in the companies that do that kind of work here in the U.S.?
Well, it's a little bit hard to untangle some of that. What I can tell you is that the companies that move goods by freight, rail, and via truck in the U.S., they're feeling the impacts of the slowing global economy. And trade uncertainty is certainly playing into that as companies are either pulling imports forward to try and get ahead of tariffs, or people are trying to figure out where they're going to source things, how their supply chains might shift, and how that might impact the prices they charge their customers. All of this you see coming into play in the transports. So
Morgan, I mean, you watch this stuff, speaking of granular, on a very daily basis, sometimes hourly and minute by minute. You pay attention to a lot of different data points in your coverage for transportation companies.
Yeah.
What exactly has stood out to you so far this year with regard to a data point that you think is most indicative of that slowdown that may or may not be happening with the U.S. economy?
I think, as has just been touched on, I think you kind of look across the freight landscape, and all of the different data points have been rolling over and showing increasing weakness, and weakness that seems to be accelerating. So you have the air freight numbers, 8 consecutive months, negative air freight growth. Rail, if you look at total U.S. rail traffic, it's down another 5.2% over the past week. It's down 27 of the last 28 weeks. You could say the same thing about some of the port numbers, the barge numbers. They're just, in general, maybe e-commerce aside, there seems to be just this weakening of the data right now. One of the most interesting, I guess, correlations that I've seen pointed out this week actually came from BMO, noting that the air freight numbers actually tend to lead the rail carload numbers by 2 months, and you are seeing that play out in some of the data right now, which is something to keep an eye on and think about with some of those rail stocks.
Donald, air freight and rail cargo, those are things that we can kind of keep a close eye on. I remember the day in the heyday of the Baltic Dry Index, we used to look for rates that were charged on Cape Max and Panamex vessels. We looked for how much iron ore was being shipped and coal between Australia and China. Are any of those cargo routes ocean-bound telling you anything at all about what's happening as well with the U.S. economy and the global economy?
Well, absolutely, absolutely. We continue to hear this ongoing talk about how people are pulling forward, and I sit there and scratch my head because the actual volume numbers don't necessarily shore that up. You know, you look at, say, Long Beach, L.A., container port, so goods coming in, been a great predictor of what's going to happen with retail sales in the United States. And the bottom line is when volumes were down 6.3% in May and down 5.1% in June, that's inbound into that port. That's the largest container port in North America. It's more than 1/3 of the U.S. volume, more than 2/3 of what comes into the West Coast. When it's down 5.3 and 6.1 and 5.3, how is that pull forward? If it was pull forward, you see higher numbers. So I always scratch my head when people say there's pull forward ahead of the tariffs, and it's like, well, via what mode? It didn't happen in air freight. It didn't happen in the ocean freight.
Gotcha.
How did you get it across the ocean?